Good
Chris,
morning.
it's just me right now, or
Hmm?
Justin, whoever's rolling us. Hi, Alicia. Good morning.
How are you? Hi, good morning, everyone.
Good morning. Alicia, you don't have to be here for like another half hour if you don't want to be here.
Oh, I'm sorry. I was
It's
wondering where
totally
everyone is. Bye.
We're doing the Ticker Highlight Show 10:30. All right. So, folks, good morning. Good morning, everybody. I am Mark Sebastian. I am your only option. So here's what's going to happen this morning. I'm going to spend about 20, 25, 30 minutes with you guys, walk you through what's happening, what happened with the developments over the weekend, the bond market. We're going to dig into all of that. And then immediately following, we're going to do what's called our Ticker Highlight Show. We do this once a week. And if you are on our Pit Report email list over the weekend, you got a breakdown of several stocks, along with the three of the same stock that we all did. And then we each picked our own that we thought maybe had some value. And so we're going to kind of be talking about that during the Ticker Highlight Show. So some actionable ideas coming out of that. But for today, let's dig in and let's start and talk about what's happening with the market. If you want to share my screen. All right. So the S&P is up 73 points, little off the high, well off the lows. Q's up about 7, and the Dow up about 375. So call it about 1.5%, 1%. Big jump there at 10:03, and 1%. So a nice bull day. Nothing crazy. This isn't one of this so far has not been one of our 9 million point rallies that we've had. So let's take a look and see where we stopped. The high on the 9th was 54.81.34. The high for today, 54.59. So we're still kind of not at the highs from the 9th. We closed 54.56.90. We're currently 54.59.40. I'm sorry. We're currently 54.46. We bounced off that closing level. The high is just above that level. So that's kind of the major S&P level that I'm kind of keeping an eye on for today. And then after that, the gap price from the 3rd and the 21-day moving average almost line up perfectly. If we can break higher here, this probably is some nice resistance here, guys. That's an area where if I did some short swing trades long, I'm looking to harvest profits. That's where I live. On the 5-minute, you can see we opened at the high of the day, but we're now, since that opening candle, we're now approaching the highs. Just got to the 1 minute. You can see where we are. Now we are basically at the highs of the day. So, a little bit of bullishness. We're retesting that level that I was laying out for you right here. Retesting that high, and we'll see if we can get up toward 5,500. That is obviously the big question. All right, now looking at kind of the pieces, the levers I'm watching in this market. I want to start with the Russell 2000. And these are extremely interest rate sensitive. And I keep telling you, it's hard to really say that things are better while the Russell is not kind of our leader. We want to see the Russell the Russell 2000 leading us higher. We want to see those small caps leading us higher, and they are not. Now, digging into the volatility index, you can see it's really pulled back. We're still above 30. And our futures term structure still backward. Now, what are you looking at here? The green line is the volatility index, the VIX. That's a measure of option prices. When you think of VIX, you're going to hear people call it the volatility index. They're going to call it, people will talk about volatility. That's just another word for how expensive it is to buy and sell options, and at what price. And, the VIX is that measure of option prices. So this April future expires on Wednesday. It is for the next 3 days. If you're looking for a way to trade VIX, like if you think VIX is going to make a quick move higher, you can buy April calls buy and sell them through Tuesday. You have to be out of VIX by Tuesday. But this is going to be a really good proxy for just trading the index itself, because that April future is going to be highly sensitive with it expiring in just a couple of days. It's going to be extremely sensitive. All right, now, one of the levers I'm watching for calmness, though, is not April. It's this relationship between May and June. I want to see May at or below the June futures price. That would put us back in a flat curve. A flat curve tells us that, the market's in confusion, but a flat curve coming from a curve that's backward like this usually means we're going into contango. All right, and just a reminder, when we have this pattern, looks like a ski slope from left to right, all trading below the VIX index, this is called backwardation. Yeah, Vicky says a flat curve sounds like a contradiction. It's kind of an oxymoron, isn't it? So that is what a backward curve looks like. A contango is like this. You have VIX trading below the front month, trading below the next month, so on and so on. And it looks like you're wanting to ski down a mountain from right to left instead of left to right. And then in between that is going to be like a flattened curve. There we go. So a flat curve is going to kind of look like that, where everything VIX might be up here, but the whole curve is just the same number. And at a minimum, I want to see this thing flatten up. All right, let's talk our movers and shakers, because, and we're gonna look at these in more detail momentarily during the Ticker Highlight Show in approximately 19 minutes. But Apple up really big today, back over the 21-day, and now starting to fail. Where does that go next? We're going to answer that in the Ticker Highlight Show. And then We're going to be looking at Amazon and NVIDIA as well. But you can see these names are, we're kind of all over the place when it comes to these Mag 7s here. This is my master watch list. And, Apple's up 3.5%. Amazon's flat. Google's up 2%. Microsoft is having a nice day, up 1%. Meta is up 0.5%. And so it's a lot of green, but there are spots where things still look weak. All right. So there's that. All right. Then we're going to kind of do our own things. Now, an area that is having a nice day that maybe shouldn't is FXI. It's up 2%. And this is one where I'm looking around trying to find a put. All right. And I'll circle back to China here in a second. But I want to talk about my third and final lever, and that is the bond market. The bond market, since the 4th, has been in a free fall. This is TLT. Now it's up a little bit today. And it's off, it's not getting crushed. But the basis trade risks are still really out there. I want to see TLT and I want to see IEF get, start to rally along with those other levers. So those are kind of the three things I want you watching. One, is the bond market stable? One, is the bond market stable? All right. Two, is the VIX curve flattening up? And three, is the Russell 2000 leading us higher? That is your formula to know when it's truly safe to get in. I told you I did dip my toe in on the lows last week. Not just a little taste, but not a T-bone steak. And tentatively, if the bond market's going to hold up, there's a good shot that the market is able to, kind of continue higher. You can see where the triple Q stopped, right at its 21-day moving average. It's got a slightly different pattern than the S&P, And the April 2nd low currently aligns with kind of where we are on of that 21-day moving average. And looking at trades here, just kind of updating everyone on the S&P. Move higher, move lower. Again, I've given you the levers to know when it's actually safe. But the Russell 2000 being this bad is not awesome if you're a bull. So strategically, I'm going to be looking to maybe sell some of my long options potentially today. Not all of them. But we are in kind of a chop fest. All right. Now, many of you have gotten, last week during our 15th anniversary, I invited all of you to join me live for 3 days in Delta Strike. And Delta Strike, I meet with every day from 12 to 12:30 at a minimum, usually more like 12:45-ish we go to. We look for actual trade ideas, manage them, close them, and you are going to learn how to harness large institutional flow to make money. And that is what we do in Delta Strike. I'm going to pull up something like my scanner, and I'll tell you like some of the stocks that I'm trying to find big orders in. I'm going through these big, large block orders, trying to find stock trades that make a lot of sense to me that I want to go long. So, for instance, Friday we went long. We bought FCX calls, and that has been fun. All right. And if you would like to join me, we're doing a special right now. $19 for the week. $19. It's like a cup of coffee. It's less than a cheeseburger at McDonald's now on a daily basis. So $19 for today, tomorrow, Wednesday, and Thursday. Friday, markets are closed. So if you'd like to join me, they're going to drop a link in here, and you can join me. Oof, $18. All right, now let's get back to. They're going to drop that link in. All right, but let's get back to kind of what I'm looking at, and it's back to FXI. It's had a nice run. You can see where we are now. But I still think there's a lot of downside there. We're going to see Alibaba up here. So Alibaba has recovered a huge amount of its downside. All right, and there's the link, guys. When is the market closed? Just Friday or Thursday also? Just Friday. You can join me in Delta Strike there for $19 for the week. Lots of fun. Markets just closed Friday. But Alibaba, I think, looks very appetizing. So if I'm looking for things to hedge myself in this market, and I want to be long, I'm buying puts in two places. One, these Chinese equities, Alibaba or like a Pinduoduo. I mean, what does Temu sell that is really going to get reprieve from these tariffs? Nothing. Alibaba is kind of the same story. So if, I don't know which one of those, who of those is selling chips. Like Taiwan Semiconductor is a huge winner here. And it's down. And it's because of the American-made AI super chips, whatever. Now I understand. That's not great for them, I suppose. But just these Chinese equities that have really done well and really exploded higher have, I think there's a chance to short these things. Like if I'm looking at Alibaba here, and we might be bullish this week market wide, maybe a little bit, but we're right up against resistance, and there's still a lot of uncertainty out there and a lot of balls in the air. And again, the bond market is still a huge risk. So I'd be looking at May 2nd puts in Alibaba. And then the other area where I think there's real downside is in junk bonds. They've held up incredibly well relative to treasuries. And so long SPY, long Q, and long SPY, long the triple Q, and then so buy SPY, buy triple Q, and then hedge with puts in HYG, TLT, and FXI or an Alibaba or a Pinduoduo. Like that's kind of my cocktail in terms of broad market trading. That's kind of the combo. Now we've got some other fun ideas that we're going to be laying out. But yet again, I think we're about to go to the ticker highlight show, and you're going to be able to see us track several stocks. I'm going to start it in a couple of seconds or in a couple of minutes here. Johnny wants to know, could you use TBT instead of TLT puts? 100% you could. TBT, you're looking for a slightly quicker move because it's levered. So, it does have a little decay function to it as time passes. So you don't want to buy and hold TBT, trust me. All right, now the market has softened mostly because Apple's weakened a little bit. And again, Amazon, Broadcom is now down and a few other names. But across the board, I don't see things rolling over. I don't know that we're going to get that massive leg up. But it doesn't feel like we're going to roll over today. Now we may get a stock or two. I joined Delta Strike $19. How can that be a loss? Great. Welcome. Love you, Boston Mindy. And I'm excited to have you guys all on board. Now, you'll notice that, and I'll close on this. You'll notice all the volatility ETPs are down nicely today. They still have positive decay. So it's still not the world's easiest short. I would be more interested in playing with these things on Wednesday once the April future expires. But until then, they're still kind of in stay away mode. Yeah, you might as well. Yeah, we want you guys in Delta Strike. The $19 was so that we can have an opportunity to try and make some money in this market. And take advantage of all these opportunities. One of the things that's great about directional trading right now is if somebody's buying a ton of calls in a specific name in this kind of market, it's almost more clear that they think it's going to go up. And ditto in the down stuff. If someone's putting a leg on it specifically on puts in a specific name, then again, you get an extra grind. So this is a really good market to be trading in Delta Strike. And again, just join $19. Again, that's like three Big Macs. So call that a meal for, President Trump's favorite. Although I think he's a filet of fish guy. I was going to say, call it President Trump's favorite $19. If you have questions about the subscription, give us a call, 888-872-3301, and hop right in. All right, everybody, I want you to stay tuned because I'm going to be back in about 1 minute. All right. And we're going to start the Ticker Highlight Show. It is 10:28. Ticker Highlight Show starts at 10:30. And me and my team will be joining you. But I'd like to remind you one more time, just give us a join in Delta Strike and pay attention to those three levers that I laid out: the bond market, the cost of options, and the Russell 2000. If you haven't written those down, write them down. All right, folks, stay tuned. The Ticker Highlight Show will begin in 2 minutes. See you in a second, guys. 2 minutes. Good morning, everybody. Good afternoon to all my friends in Europe. This is the Ticker Highlight Show. In today's episode, we are going to take a look at the relationship of Apple and Amazon and talk about some of our undervalued picks that we see in the market right now. Opportunities, stocks that we're buying, that we're interested in buying right here or the level that we would. So, joining me on the show today is, of course, the Queen of the Candles. We call her the Queen. She is Leisha J. Leslie.
Good morning.
Good morning, Leisha. And then joining us from Mississauga, Pretty close, right? Mississauga, right? Mississauga. That's right. Right? No. All right. Joining us is our Imperial Overlord of Income. He is Hans Albrecht. Good to see you, Hans.
Good morning, everyone.
Yes. And if you're not a member of Turbo Income, change that. And finally, joining us from the coast of Maine, he is our own Vicar of the Vix and the Viking of Volatility. He is Andrew Giovinazzi. Andrew, happy Monday.
Happy Monday. There's
right.
a happy song.
All right. So let's share my screen. We're going to start by looking at Apple and Amazon and where they are right now. Apple off the highs, but back above 200. Fundamentally, the PE back below 30. Okay. Now we're at least somewhat in range. But for the revenue growth and everything involved, I think this reset in Apple prices was needed. And, it's a cash machine, but I think investors in Apple should recognize it for what it is. You're going to get dividends. You're going to get growth with the regular overall market. And, it buy and hold, put it on a drip and forget about it. But you're not going to get the hockey stick part of Apple's growth is over. Now, on the other end, we broke down Amazon, NVIDIA, and Apple this weekend along with our own picks. We're going to kind of bypass NVIDIA. There's a lot of news there and dig right into Amazon because it has been, of the kind of major names, it's kind of underperformed relative to Apple coming out of this, coming out of the bottoming. Still has, I think, a lot to recover to, even the chart has not been as strong as this move Apple has made in the last 3 days. But fundamentally, what? There we go. Fundamentally, when was the last time Amazon carried a price earnings ratio even in the low 30s? It's interesting. Is Amazon exiting that hockey stick, or is it kind of still in the midst of it? And that's your question on that valuation. It's obviously not in the crazy growth period, but I still think there's kind of another leg up in terms of the relationship of AI and how it interacts with customers that are shopping at Amazon, and just everything I see here. So I think Amazon with a slightly higher PE than Apple is kind of interesting, especially when you look at where Walmart is. Come on. There we go. Walmart is currently carrying a higher valuation than Amazon, which is absolutely ridiculous. Now, it's not worth as much, but from a price earnings ratio, it's carrying a higher multiple than Amazon. That's, to me, proof that Amazon's probably worth a scoop from a fundamental basis. Now, last but not least, the name I like is DVN. You want a low multiple? Now, they have debt. You want a low multiple? How about 6? How about 6? Devon Energy pays a 24-cent dividend quarterly. That's $1 a year on a $28 stock, almost 4%. And the chart is just sadness. But how much? Where is my downside here? This thing gets down to 26 again. Just feed me. I'm like the plant from Little Shop of Horrors. Feed me, except for instead of human body parts, I want shares of Devon. That is me. All right. So that's what I've got and where I land. Let's swing it over to our own Queen of the Candles, and she's going to break down Apple and Amazon for us from a chart perspective, and then share kind of her charting idea, which is a doozy and probably my favorite, one of my favorites. And I wish I'd have thought of this one first.
So for on the charting and on the pitchforks, Amazon's lagging, like you said, Mark. Amazon's lagging. I have resistance up here at the median line 189.21. Above there, though, you're going to see 191 and then 198.5. Below here, I see support 180-ish. But yeah, kind of lagging. Didn't have that nice big gap up like everyone else did this morning. Your MACD is turning bullish though today. Yes, Friday, and then today's more evidence. Apple's interesting. It opened up right about my median line. It's holding it here. Resistance. When you have a gap, you usually wait 2 days, a day or two. Make sure it holds the gap, and generally it will continue in the same direction if it holds. Apple, I would wait until this afternoon and make a decision, if it's going to try to close that gap or not, or stay up here. It is still up against this downtrend in RSI, and MACD has not turned bullish yet. My stock choice was PLTR. It had a big move already today. I was looking at it bull flagging here up against that resistance. It cleared its most previous highs. These previous highs back in March, the end of March, are the resistance at the moment. Again, same idea, wait a day or two, it should continue higher. 103.70 in a couple of days, I would say. And as I said, as I wrote it up, I think it could trade back up here to my median line eventually. 119, and I think I said 125. MACD is bullish, just crossing today, the zero line, that's more bullishness, and RSI is bullish. You could use today's low as your stop loss if you were to hop in there today, which I may with Option Shopper.
All right. So there you have it. So far, you've got breakdowns on Apple and Amazon. You've got Devin. You've got Palantir. Up next is our own Hans Albrecht, Turbo Income Master. All right, let's talk about Apple and Amazon, and then share your stock. You're muted. Still muted.
Still muted.
All right. All right. Well, we'll kick it, Hans. We'll get back to you.
There we go.
All right, we got
I
it.
got it.
All right.
Okay. Sorry about that, folks.
We'll
Okay,
edit
so
that. We'll
Apple-
edit that in post.
Yeah, Apple's in the midst of a storm, and so I don't love it there. It's not the big innovator. It's not, it's come down a little bit. I like it, but I prefer it maybe down around 160, 170. Amazon, one of my favorite stocks out there. I agree with you. Valuation is very compelling. They are taking over the world, and I think they continue to use AI in a very monetizable way. So I love that stock. It's a stock that I've been adding. I think it's something you can just absolutely hold for the long term, despite the current storm. Now, my extra pick here is Uber. So Uber, it is a verb. I love companies whose brand is actually a verb. I Uber. Do you Uber? Everybody Ubers. Even if it's almost like Kleenex. You don't say, grab me a Scott's tissue. You say, I'm going to go grab a Kleenex. Kind of like that with Uber a little bit, right? Grab an Uber. It's in movies everywhere. So I love that. I love that they hold this amazing sort of commanding position in that global ride hailing and food delivery business. there are other competitors. There's no question about it. They really have the lion's share of the North American market. Around the world, we do have some other competitors as well, but I think that represents, even though they're one of the biggest, I think that represents the potential to continue to expand out there. So it's a company that has this amazing sort of brand and network effect, right? The bigger they get, the more they benefit from these sort of economies of scale. They can offer cheaper insurance, things like that. And just more and more eyeballs just means more ways to monetize. Trading at one of its lowest enterprise value to operating cash flow. So cash flow is a really, really big part of Turbo Income. We always like to see a good amount of cash flow with any sort of quality company. So one of the lowest we've ever seen. Historical average on that metric is 51 times, trading at 21 times. Robo-taxis, definitely a little bit of a threat, but realistically, that's not going to be a big issue for probably 4 or 5 years. And Uber is doing all the right things. They actually abandoned their own autonomous vehicle efforts, which is smart, right? A smart company realizes what it's good at, and it aligns itself with partners who are good at that sort of thing. So they're aligning themselves with NVIDIA, with Waymo. Tesla did not want to do anything, so we'll see. They'll definitely be a formidable competitor. But Uber is doing all the right things. They've got the interface, which is what they're very, very good at. So, and they kind of have almost like a built-in hedge. If you sort of think back to COVID, when ride hailing really, really dropped, they made up for most of that with the food delivery. So they kind of have these separate parts that are working really well. They have Uber Freight, and more things are going to be added to that. So I just see incredible potential out there for a company like that from a revenue and monetizable eyeball monetizing standpoint.
Yeah, I mean, there's a reason they're called Uber Technologies and not Uber Taxis for a firm name. So they're a technology company, and that's their strength, right? Their strength is not the actual drivers; it's their ability to manage and assign drivers quickly and efficiently, and pay them, and having that infrastructure. So I agree with you, Hans.
And by the way, Mark, it's the only one of the whole bunch that we're talking about today that actually has a positive MTI. So the MTI, market temperature indicator, is something that everybody in Turbo Income gets, and we use that as one piece of our filtration system, our scanning system, to find those great names for income trades. And it's the one that actually is starting to sort of point in the right direction. It's not quite in that sort of green area, but I like to see the momentum starting to turn towards the positive. That's a really nice thing to see.
That's great. Speaking of nice things to see, here's Andrew T. Giovinazzi, T, of course, for Two Way Trades. And he's going to talk about where the option prices are around some of these names and share his idea as well. What do you got on Apple, Amazon, and your surprise idea, Andrew?
My surprise idea. So I'll start with Apple and Amazon first. Again, I am of the mind here with Apple that this is a kind of a thing to fade just a little bit. And option prices are still, I would say, relatively inexpensive. Although from an absolute point of view, you can look at this as 30-day volatility here. And you can see that, we have volatility hasn't been this high, and I'll go back 2 years, right? Like it's crazy town. Mm-hmm. So in general, when volatility is this high, I'm kind of spread man, buy something near the money, sell something out of the money. However, the moves you're seeing in Apple were like 50-point move down from the lows. This was only a couple of days ago. We had the giant candle up. So, can Apple get back to 220? Why not? However, you have to think that there's going to be a little trepidation about their business. So I don't, because they have so much China exposure. But apparently I'm not quite sure what the latest tariff is on that. Right now, it appears that it's looking good for them. So Ed's saying, did you say you would fade Apple? Yes, that's what I would be doing. Of course, in trading desk, we'll be doing a little offsetting trade. Amazon is, again, notice when you're looking at two totally different stocks, how different the stocks are, Amazon, but how similar all the volatilities are. You're going to see this everywhere. So again, I like the idea of long Amazon, short Apple as a trade for us. And because of where volatilities are, I'd be doing it via spread just because they are so astronomically high. That would be my take. Oh, in my stock.
Yes, that's
these stocks I spent the most accumulating during this kind of fall apart. In that I bought a lot of biotech over the last couple of weeks. And this is Regeneron. This was a $1,200 stock about 3-4 months ago. I bought more down here. I think AI will help all the drug companies a lot. So I bought a little more Regeneron down here. It was one of my stocks for the year. It's traded as high as $750. I think the easiest thing here is just because vol here is just way much. The stock really hasn't been moving near as much. So I like basically broken wing put fly to accumulate some shares below $500. That's my idea here. That's what I'm doing. But I did buy a little stock just on the Andrew nibble routine when the market drops below 200-day moving average. I'm just doing the Charlie Munger thing, just buy a little. But anyway, this is stock I like. So 1x2 put spread, short put spread, depending on what you want. And if it gets below 500, I'll buy a little there. But solid balance sheet. They got, I think they've got like $100 in cash. Book value $282 in cash per share. It's crazy. So
that's a lot of cash.
It's one of the drug companies that did very well after COVID. So I like adding in a weakness on this one.
There you go. I like all of those ideas, but we're going to look at this Amazon Apple pair trade. If you want to share my screen, the first side of that trade is the Amazon side. And the Amazon side, we're going to go out to May. Why May? Part of the reason why these vols are a little high is they got earnings coming up too. Amazon reports on the 6th. Apple reports on the 1st. So in trading the regular May, which is May 16th, we're not going to carry any trade into earnings, but we know these options are going to hold up well because of the earnings within their expiration. So they're not just going to fall apart. There's going to be an underlying bid there. But we're also, these are active enough options that we can jump in there and do it. So the first side of my trade is buying the 195 call on Amazon for like $5.80. Now on the Apple side, up $7.
Well, hold on, Mark. I want to write these down. So what do you got going on here?
I'm going to put them in. I'm going to put them into the portfolio here when I'm done here.
Okay.
And then the other half of the trade is going to be buying the May 195 put for $6. You're basically 1-to-1. Those two stocks are almost the exact same price. Give or take a couple of bones here or there. Apple's a slightly lower implied volatility than Amazon. Amazon slightly lower price. So their options end up being worth about the same. But that is, I think that pair is going to pay you well. I think you're going to get an opportunity to get out of one, and you'll end up for a really nice profit, and then you'll end up sitting on the one side, and that one side will end up working too. So I'm looking for both sides to win. All right. And folks, these will be in our ticker highlight show portfolio. And and you will see them there shortly. All right, everybody. Any questions for us?
I got a question for you guys.
Sure. What do you got?
Do you think we're going to get to 560 SPY this week? Because the market just doesn't care. Doesn't care. Sorry. It's not caring right now.
Why are you apologizing? What did you do to make it not care? That's my question.
It just you got all this turmoil and like market does not care. What about trades on VIX, South Bay J? You got to come to trading desks. You got to come to weekly profit cycles for trades on VIX. Or you can read my newsletter that comes out every day but Saturday, I believe. Market action. So if you're reading that, you should know what I think. Greetings from the Hollywood Riviera. That's where I grew up, South Bay J. I am off on Tuesday. Oh, Nina T, you stopped getting all the newsletters? Just call them. Call Ted. What's the link to market action? Again, I don't know where the links are for those things. You should be getting them. It'd be nice. I'll ask Christian to get me a link for it.
All right.
Like, dude.
So great. Now, folks, I want to remind everybody, I am doing a special this week. $19. Or if the trades are in, so if you go to the free portfolio, you'll see the trades in there. This week, we're offering a week of Delta Strike for $19. That's less than 3 Big Macs. The link is pinned here. We meet every day. I break down what's going on in the market. I walk through all of my watch lists. We go through our portfolio, and then we look for new opportunities. And so you have the opportunity to join me this week for $19. Click the link above and join me. What do you got to lose? What do you have to lose?
Delta Strike is way better than a Big Mac.
Yes, thank you, Jay. I appreciate that.
It is.
So, all right, everybody. So click that link. Join us. Join me in Delta Strike. And the trades, again, are now posted. So for Alicia J. Leslie, the Queen of the Candles, who had to depart, and Andrew T. Giovinazzi, our two-way trade master, and, of course, Hans Albrecht of Turbo Income fame. I am Mark Sebastian. I am your only option. Have a good one.